Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Let me check my volume. Mic check, 1 2 1 2. All right. Yeah.
Sounds good.
Well, thank you. Thank you. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I'm going to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you know hablo español. And you're tuned to another episode of the Intraday Price Action Recap. If you look in the description of all of my videos, there's a link there that's talking about the Smart Money Manuscript. What is the Smart Money Manuscript? It's your one-stop shop for everything that you need when it comes to trading, investing, anything you want to know about the stock market. It's $69.99. 19 video courses, 19 quizzes to go along to test your knowledge. And it's talk about everything from the basics of basic money, budgeting, banking, taxes, to retirement, to portfolio management, to options, to trading, to futures, to ICT concepts, everything that I have inside my noggin. It's right there for you for $69.99. Plus, it comes with the Smart Money Mentorship, where every second Saturday at 12 p.m. Eastern Standard Time, we meet inside the live stream channel, inside the course, and I answer your hard-hitting questions, all for the low price of $69.99. You can't beat it. You can't beat it. Hey, shout out my homeboy Kurt. My wife sent me a video today that he posted on TikTok. It was one of the, when we went to New York, we went up there for a brand deal with a company. And then while we was up there, we was talking about some other stuff that he had going on too, some other brand deals also. And he shared one of the TikTok clips for one of the brand deals that he had, and she had sent it to me because I was 6'7". Okay. One of the brand. Can I look at? I don't know if I can look at TikTok on the computer. Was she gonna fall? Oh, she didn't fall. I hate when I be looking at something, I be thinking they gonna fall and they don't fall. Man, just fall already. That's what make it funny. Let me see if I can. Let me see if I could. Can I look at TikTok on my computer? Oh, I don't even have my trading view open. I don't know. We wrapped up with pizza at Bleecker Street Pizza, and of course, grab bagels the next morning before heading home. With Hotels.com VIP Access Hotels, you know you're getting a great stay. Plus, you earn extra cash to spend right at the hotel. Book your next getaway with Hotels. Can you see like a?
He did nothing wrong. I was here the entire time. I was here the entire time. He did nothing wrong. He did nothing wrong.
After checking in, we grabbed lunch in Chinatown, cruised past the statue. That's it right here. And went under the Brooklyn Bridge.
Me and my friend, we got 24 hours in New York.
It all started with checking into our VIP Access hotel through Hotels.com. We stayed at the 33 Hotel NYC, modern, stylish, and right in the heart of the city. After checking in, we grabbed lunch in Chinatown, cruised past the Statue of Liberty, and even went under the Brooklyn Bridge. Then we walked up to Wall Street, got our classic photo with the charging bull, and caught the subway to the Edge Observatory. The views are unreal, y'all. We wrapped up with pizza at Bleecker Street Pizza, and of course, grabbed bagels the next morning before heading home. With Hotels.com VIP Access Hotels, you know you're getting a great stay. Plus, you earn extra one-key cash to spend right at the hotel. Book your next getaway with Hotels.com and make every stay feel first class.
Me and my friend, we got 24 hours in New York.
It's cool when you got famous friends. Today's sell-off was fast and furious. What's going on, Felicia? Hey, shout out to Curly Coopers, man. These my friends in real life. We friends in real life. If y'all into like family vlogging type stuff like that, go check them out on all the platforms. The Curly Coopers, YouTube, Facebook. YouTube, Instagram, TikTok. Everything is the Curly Coopers. They started out on YouTube, but now they, you know what I'm saying, they super famous on all the platforms. Now you see they got like 394,000 followers on TikTok, and they got, you know what I'm saying, they got like all them plaques for YouTube and stuff like that. So they, you know what I'm saying, I've been knowing, like, that's Dewana right there. I've been knowing Dewana mama forever, and I've been knowing Dewana ever since she was like a little teenager in high school. You know what I'm saying? And matter of fact, I remember when that's their oldest daughter right there, Aya, the one that right there. That's their oldest daughter, Aya. I remember when she was pregnant with Aya, and Aya 16 now. I've been knowing them ever since they was some little wee bitty shrimps. But they yeah. Good for if you're into family vlog type stuff like that, go check them out, man. The Curly Coopers. But that's who I was in New York with, Curtis. Me and Curtis went to New York when we did the day trip. We had flew up there. We flew up there and came right back. We flew up there on Monday and then came back on Tuesday. I think it was we left Monday. Left Monday and came back Tuesday. Yeah, that's what it was. All right, who we got in here, man? We got Deborah. All right, we got Deborah up in here. Deborah, when I thought about you the other day, I was in Sam's, right? And it was a lady in there, and her name was it. Oh, I'm trying to think. It was Deborah, but it was weird. You know how?
Deborah.
Nah, it was
Wrong
worse.
with that? Oh my
It,
God.
it was like Deborah, but it was worse. It was like the beginning part was there, and then it was like the beginning was like some kind of dead, and it was like Bora, but it was something weird in there. And I was like, man, I'm gonna remember how they spelled so I could tell Deborah about this. But it was like it was so strange. And then I met a lady today. Well, I ain't meet her. I see her in Sam's all the time because I go in there, and her name Erica, and she spelled her name A-E-R-I uh Aerika, I think. Erica. And I said, did you make that up or did your mama get that to you? And she was like, how I'm going? I said, people can change their name. People
Yeah.
change their names, you know what I'm saying? And she was like, her auntie named her. But I'm trying to think of how because it was Deborah, but it wasn't just Deborah. Like it wasn't like DEB. It was like something weird in the beginning with the Bora at the end. I say, boy,
Oh goodness.
you better stop playing with me. Your mama got to be 19 and a half right now. Your mama got to be 19 and call. I'm telling you, that generation after me, they start doing something crazy with them names. I ain't gonna hold you. They start doing some, like my generation, we named our kids with apostrophes and stuff like that. We put all them apostrophes in our kids' names when I was growing up. That's why I was like, my kids gonna have regular names. It ain't go because when I was growing, all the females that was having babies when I was a teenager, they kids had all these apostrophes in their names. You know what I'm saying? Hey, but you know what I'm saying? But hey, if it can just sound like something simple like Deshaun, but it ain't gonna be like it's gonna be D apostrophe SH. they put some apostrophes in the names. But after my generation, oh my goodness, we start getting names with their favorite celebrities blended together. I see somebody named their daughter Rihanna, cause she like Rihanna
Oh
and
my God.
Beyonce. And she named her daughter
Beyonce.
Rihanna.
Oh Jesus.
Yes.
Mm.
I say you better get out of here, you look. Well, if you ain't spared, I don't know who will.
A nurse friend of mine, her name is Nemesis.
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 Cheese and rice. How her mama 32? But I'm telling you, hey, them younger people, their kids have some names on them. My kid, when they was in elementary school, the teachers they got they names. Timothy. Oh my God! Finally, Timothy. Where's Timothy? Finally, one I can say. That's like Elon Musk's son. Elon Musk, I think he named his son something. It's just these weird characters of letters together. I can't remember how you're supposed to be able to say it, but it's just like a weird string of characters together. Oh man, I'm trying to think of that weird one. It was golly, it was something three. It was something three. Oh man, what is it? I'm gonna think of it in a minute. Anyway, we got Deborah. We got my watch dead. We got Jim up in here. I ain't seen Jim in the month of Sundays. Jim, where you been hiding at, Jim? My feelings kind of hurt, Jim. You been hiding. You ain't been hanging out with the gang lately.
I've been traveling.
Oh, you've been. I told y'all Jim is Michael. Why is it that Jim been traveling at the same time Michael was traveling up and down the East Coast? He went from Maine to Key West. And then when Michael make it back home, all of a sudden, Jim back in the chat. We got Yolanda up in here. I don't know which Yolanda we got tonight, y'all, because she done changed her profile picture on both. Like one, I used to know when she was going to be at soccer practice, Yolanda, but she done changed the picture. So we don't never know. So if y'all just hear something unmute and somebody sound like they got Tourette's or something, that's Yolanda. We got Mike Pence fly up in here, hanging out with Empire Trade. We got Seawalk up in here. Y'all already know we got Felicia up in here. Felicia, we got Here to Learn and Share up in here. We got somebody named M Towns. M Towns. I ain't never seen that name before. And by you putting 67 in the chat, I'm assuming that your parents probably named you a very funny name, because anybody that talk about 6'7" is like my kids' age. But thank you for joining us, M Towns. I said hilarious. I said that. We got Father Legends in here, man. We got Father Legends. What's going on? Hey, man, I see more numbers than I see names, but them all the names that I see. So that's all I'm gonna say. Do me a favor and hit the like button, all that stuff I'm supposed to ask y'all in the beginning, and then we're gonna go ahead and get right into it. Okay, maybe if I had my trading view open, we could get right into it. Now, right? Did price do anything today that caught you off guard? Did I still got the what's name on my chart? I didn't delete it off. I didn't delete it off, y'all. I still got it on the chart, right? Hey, somebody that's well, everybody in here in the gang except for M Towns that I could see, right? Somebody share with the people why I got this little arch right here with that little sign right there. Why do I have that on the chart with the eyeballs looking right there? What's the point of, why did I do that? What's the point of that? This little arch right here, then the little shushy with the eyeballs looking there. What's the point of that? You don't be typing the same thing that I got on the screen right there.
So we talked about that yesterday, right?
We've been talking about that a lot.
Yeah, wow.
Yeah, that's why.
Seeing that potential draw.
Got that little shushy mouth there, because we said that right there, we had a market maker sell model here, market maker sell model here, market maker sell model here, market maker sell, all these little market maker sell models, right? And we have been saying we coming down to a discount on the higher time frame, right? And was like, we're in a buy program, but whenever you're in a sell program, even if you're going against a buy program, you never try to pick the bottom, right? You just look at the signatures and see if price is still, right, drawing, right, to the low of the highest market maker sell model that's present, right? And we was always looking like this monthly low right there, right, would be the potential draw if price stayed heavy, right? And we have been talking about that ever since we identified that we were on what? Ever since we identified what? We have been looking at this as a potential draw. Ever since that we identified that we were on what?
The right side of a market maker sell model.
Yep, very good. You see how I did my little Muppet thing when you were talking? Right side of a. Hey, you know what I always wondered when I was growing up? Why with Muppets, just look at us, right? When we talk, we say 1, 2, 3, our chin go down when we talk. our chin go down. But Muppets, when Muppets talk, the top of their head go back. They couldn't get a better design with the little hand. Like pull the thumb down so that the bottom of the chin to go to, instead of their head can be like Kermit the Frog here. Oh, I kill me. All right. Let's look at it. Did Price do anything today that caught anybody off guard? All right. And if you wonder why I got this on a 4-hour chart, the 4-hour chart was just the only thing that I could get like all the important information in the screen for a screenshot that I shared in the Discord. There's nothing magical about putting it on a 4-hour chart. Matter of fact, I don't really use the 4-hour chart anymore because I found that for my trading style, that the 4-hour chart is a little bit too high for me to be looking at. So now, instead of using the weekly, the 4-hour, and the 15-minute, and the 1 minute, now I use the daily, the 1 hour, the 5 minute, and the 1 minute. Those are the time frames I use now, right? Still the same idea of 2 time frames down, but the 4-hour as my narrative time frame, a little bit too high for my trading style.
You don't use the 15 for the bellwether?
I use the day.
What? I heard what you said. Nothing.
I still
Never
look
mind.
at it. I look at the 15-minute. It's like it's not that I don't look at the 15-minute. Y'all already know I look at the 15-minute because when we're doing a tape reading, right? I have the screen split like this, and I'll have a 1 minute here, right? I have a 1 minute over here on the. Wait a minute. My fancy dance ain't on. Why is my fancy dancing not on? Oh, we didn't do no tape reading today. That's why it's not on. All right. Over here, I have a 1 minute here, 15-minute here, 5 minute there. Right. So I still look at the 15-minute. I still mark 15-minute PD arrays. But for my trading decisions, I use the daily, 60-minute, and 5 minute as my 2 time frames down, right? Because as we know, like this is a 60-minute chart, right?
Mm-hmm.
And when you do the 2 time frames down, the market maker models just pan out like beautifully. Like looking at this move up on the 60 and then down on the 60, as we know, this is a market maker sell model on some time frame. All right, so we're just gonna go here, right, and do like this and come back down. I probably should put it right on the candles. Try to see if I can get it right on the candles. It's hard. Right, and then if I go down to a 5-minute time frame, right, and look at it, see the market maker models, even though this is a straight shot, but they pan out, you know what I'm saying? And then the lower you go down, right, the market maker models form really well on 2 time frames down, right? And especially when you have ones that don't just drop like this. See how we got these drops? They be very detailed when you, and like looking at this hourly time frame, right? So we're looking at this market maker sell model right here on the hourly time frame. If we go up to a daily and look at that same time, we see that it's a expansion and a retracement on the daily. But when you go down to the 60-minute time frame, right, you can see a very detailed market maker sell model right there. And if you go down to a 5-minute time frame, if we can get it all into the shot on the 5-minute, which we probably cannot, but yeah. So see, it's just a very detailed market maker sell model with a whole lot more detail on it. Right. So when you go to 2 time frames down, it just kind of help you see the institutional order flow very good and help you keep your decisions from, oh, this is what the higher time frame doing. Oh, we have a 60-minute SIBI up there. So the 5-minute probably gonna go into a buy program to get back up to that 60-minute SIBI. And once the 5-minute switch to a buy program, now you know, oh, I can trust taking longs because we got this intermediate term low now. I could trust taking longs at least back up to this 60-minute SIBI right here, right? Because it's like forming out, the institutional order flow is forming out right between those time frames very nicely, should I say, for lack of better terms. All right. Did I ask if Price did anything to catch anybody off guard today? Did Price do anything to catch anybody off guard today? Did Price do anything that wasn't expected? Right? Did it do anything that was not expected? This is where we opened up a day. Today was a day. The price action up until about 10:30 was fancy garbage. It was fancy garbage. It was garbage, right? Up until like 10:30. From like 9:30 to 10:30, price was garbage. And it was very volatile. Like it was volatile garbage. I'm talking about price was moving 100 points up and down, sending people to the reset line. People lined up in the Apex reset line. Speaking of Apex reset line, like the second or third link in the description below. Yeah, you got an Apex affiliate link there. If you feel like you're ready to take your shot at trying a prop firm, use my affiliate link at Apex. They're running 80% off right now on all the evals and only $40 for lifetime PA activation fees. So if you got a 50K account, 80% off, it'll be like $37, $38. And then when you pass it and you pay $40 for the activation fee, now you got a 50K account for like $77. Can't beat that. Can't beat that. And then you get to keep like the first $12,000 that you, if you make it that far, withdraw in your pocket, and you only pay $70 for it. Click my link down there, man. Get my percentages up. That's people been asking me if I'm gonna get a affiliate link for Traderify, because I did a video about Traderify. You know what I'm saying? If you want to go look at that, I was walking through their payout process. I'm glad I did that because it's a little bit different from Apex and my funded futures and anybody ever dealt with, right? It's a little bit different the way they do it. Same stuff, but just a little out of order in my opinion. But people been asking me if I'm gonna do affiliate link with them so that they can give it a try and they want to use my link. I don't think I'm gonna do it. And the reason why is because when I read their affiliate program, right, I don't feel like my platform is big enough to make it make sense for me, because they said that they only give payouts once you make at least $1,000, right? And with my platform and the way my affiliate thing be going, that'll take me forever to get a payout. You know what I'm saying? Because my platform ain't big enough. I ain't got enough followers to be like that people be flocking in there. You know what I'm saying? I ain't Patrick Wheelan or Tanya Trades, or you know what I'm saying? Patrick be making like $1 million a month off affiliate links. You know what I'm saying? I ain't got no following like that. So I probably won't do it because I'm not going to be sitting up there waiting on that thing to hit $1,000, and I'm logging in and seeing $300-$400 after a few months, and it's just sitting there and I can't get my money. Run me my coins. Run me my coins. So I probably won't. Anyway, use my link. Somebody said it completed the model. That took you by surprise that it completed that model. Here to learn and share. That was a surprise to you, that caught you off guard, that it completed that model. Why? Because it was like a bazillion points. What's going on, Rhonda Green? Yes. Okay. Yeah, I can see that. It was a huge drop. It was a huge drop. Speaking of a huge drop, right? Looking at this market maker sell model on the 1 hour time frame, right? Come up here like this right here. Looking at this market maker sell, that's the 1 hour time frame. If we go up to a daily time frame, what is that? An expansion and a retracement, right? Looking at this on the 1 hour time frame, okay, right over here, this area right here, right over this area right here, what area is this little accumulation right here? What area is this right here? What area is that? This is the last area of what? Hello. I think it was a larger range in the candle a month or so ago. The last stage of, somebody said the last stage of accumulation. Do y'all agree with that?
Is it redistribution?
Yes. That's our last stage of redistribution over there. Right? Because you have different stages of you have your smart money reversal, you got your low risk short, you got your first stage of distribution, you got your second stage of redistribution over here, right? For me, little Timmy Rogers, right? For every stage of distribution that's on the right side, I just call it redistribution. So I know that it's a market maker sell model that I'm referring to, right? If it's on the right, I say on the right. I say reaccumulation for buy models. I say redistribution for sell models. So I know that I'm on the right side of the curve, because on the left side of the curve, for the left side of a market maker sell model, you have accumulation over here. And on the right side of a market maker buy model, you have accumulation over here. So that's why in my mind, that's why I do it like that, because you'll have accumulation, reaccumulation, distribution, redistribution, right? But for it to make sense for me, I just say accumulation, first stage, second stage accumulation, then redistribution, second stage redistribution. So I can make it make sense in my mind. But the way Michael teach it, when you're at the final stage of redistribution, what do we expect coming out of that final stage of redistribution? Hello, it's me.
Was that original?
We expect it to.
Original Silver Bullet?
Yeah, it was based. The original Silver Bullet was based off of that. But what do we expect coming out of there?
After the retrace, you expect it to go reach its target fast. It's going to speed into that.
That's it. A volatile, low resistance liquidity run. Moving on up out of there. It ain't gonna be all that shucking and jiving. And so we're here, right? And that's really not that far from our destination, right? But what price engine model did we use at this stage of redistribution over here? What price engine model did we use to attack this sell side? Come on, Smart Money Manuscript. What price engine model did we use coming out of this second stage redistribution over here? What price engine model did we use? Because we came down and took these lows. And then we started consolidating.
CERD.
Consolidation,
Price engine
expansion,
model. Price engine model. Price engine model. Not if the delivery. Price engine model. Price engine model. Do I need to pull up the slides? Do I need to go to the Smart Money Manuscript? Do I need to pull up the slides from the Smart Money Manuscript?
Yeah.
You talking about AMD?
Price.
Yeah, pull it up.
Engine model. Let me see. Which one is it going to be in? Is it order flow? Let's see if it's in. Let me go inside here. Here, learn to share. If you don't stop swinging for the fences over there, price engine model. Here to learn to share over there. Close. I love. Wait a minute. I love music. Why you got Sonya picture over there? You close. You very close, but you on the wrong side of the model. You're on the wrong side of the model, Sonya. Offset distribution. There you go. We use the price engine model of offset distribution. Y'all remember now? Huh? Y'all remember now? Let me go ahead and open it up.
Yeah, so basically, like you said, that's the price engine model. And to do that model, we utilize the SERT.
I said price engine model.
I know, but I'm saying
I didn't
to
say,
do the model,
I didn't
you
say,
utilize.
I didn't say if the price delivery.
No, I know. I'm saying, but when you have that model, you are utilizing SERT within that model to achieve what you're going through, right?
You couldn't hear me?
You being funny. You being funny. I'm just asking. I know it's the model. I'm just asking. Within that model, do you use like SERT to?
Okay,
to
hold on. Let me find this right here, and I'm gonna break. We're gonna talk about it. We're gonna talk about it because this is. I'm glad we're having this conversation because this is important. I'm glad we're having this conversation. Y'all hear me say all the time, right? We want to use the proper terms for what we're talking about because we don't want to misconstrue anything. Okay. And when we're talking about if the price delivery, right, that's a total different thing than price engine models. So we don't want to mix things. Like we don't want to, we know that SERD and CURD and all that involves AMD, but SERD and CURD is not AMD. You know what I'm saying? So it's like when we're talking about a specific thing, we want to understand the concepts where we can go and take a quiz and get the answer right because we answering for the correct concept. All right. Yes. Does offset distribution look like if the price delivery of consolidation, expansion, reversal, retracement, delivery. Yes, they look similar, right? But for offset distribution, you don't need a retracement. All you need is a consolidation, an expansion, and a reversal. You don't need a retracement or delivery. So they're not the same thing. They look similar, but they're not the same. So we always want to, you know what I'm saying? Like they say in church, you know what I'm saying? Call Bible things by Bible names. We want to call things by the proper names so that we're not watering down the concepts and sharing or teaching things that are false or creating bad habits. Like we all, as adults, we all understand, right? It's a lot of things we do that are very, very bad bad habits, but we keep doing it because we ain't never get hurt. Right? We never get hurt, we never damaged anything, but we got so many bad habits that we keep doing, right? But we don't want to develop bad habits when it comes to things like this right here, because it will start to affect your consistency. It may, you know what I'm saying, when you're trying to share it with others, now you're teaching it wrong and they trying to figure out why they can't pinpoint where it's going wrong from, but they're using something in the wrong way. Right? And you know, people might be out there saying, man, Tim, it ain't that serious. Okay, for you. I'm just a perfectionist. You feel me? Let me see. Order flow, market maker models, displacement. Let's order flow, PD or IPTA. I'll look at IPTA and order flow first. All right. This is order flow. Boom. Price engine models, right? Buy programs, price engine models. Now, what do we need? This is distribution. So we need a sell program, price engine model. Somebody said, can you please explain each of those terms? Name them with the category. That is what I find confusing. It seems like overlap and I miss the terminology. Okay. 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 All right. And I got the perfect two things open here too. All right. We got if the see. Got a little bit different in here. Inside the smart money right there. I got, because it's like in the smart money manuscript. I didn't use any of Michael's slides in the smart money manuscript, so I had to, you know what I'm saying, I gave him credit for everything, but I didn't use any of his slides, so I had to go through and find it the way that I put it there in the smart money manuscript. So price engine models, right? So for price engine models, okay, the price engine model is the way that the algorithm engages with the liquidity that is engineering, right? When you think about the price engine model, right, it's the way that the algorithm, that IPTA engages with the liquidity that is generating, right? That is engineering. That's because just think about it in your head. Price engine model, the engine is in the vehicle drives you places, and so the price engine model is the driving force behind engineering liquidity, right? The engine and I just made it up just right. Boy, that boy be cooking. I just made it up just now when I was sitting up here trying to think about. I told y'all I be thinking extemporaneously and it be on the fly. right? So how have I just said that? Rewind it and remember it, right? So price engine model, right? It's the driving force behind engineering liquidity. Okay. So you have two pricing engine models, offset and re, right? Offset.
Get over here.
Yeah, get over here. Get over here and
I'm
come learn
sorry.
something.
I'm so sorry.
Get over here and learn something. Right. So you got offset and re, right? Offset and the price engine models can be up or down. So if it's in the case where you're going up, it's accumulation. And if it's in the case of you going down, it's distribution. So you'll have offset accumulation and offset distribution, right? The accumulation is in the buy programs going up, right? So you got buy program price engine models, and then you got sell program price engine models, distribution. Okay. So you got offset accumulation, and offset accumulation is when it reprices under the low and runs the sell stops before leaving the area of consolidation in that accumulation, right? So when you're on the right side of a market maker sell model, or on the left side of a market maker sell model, or on the right side of a market maker buy model, right? You're looking for offset accumulation or reaccumulation. Reaccumulation is just when you get an area of consolidation and then you expand away from it and then come back to like an area of fair value, right? You expand and retrace back to an area of fair value. Okay. So offset, it entails running the opposing liquidity before expanding in the direction that you want to go. And then re entails just expanding in the direction you want to go and then retracing back to an area of fair value. Okay. It's all about how you engage with the liquidity. All right. Now, price delivery, right? If the price delivery, this is exactly what it says, how price is delivered to Picasso's house, right? How is it delivered? How do you get to your destination, right? How do you get to your destination? It's not so much about how is it engaging with liquidity, it's how is it getting to the destination. So, and it's only going to be delivered in two different ways throughout the overall idea of price delivery. It's going to consolidate, expand, retrace, and then deliver, or it's going to consolidate, expand, reverse, retrace, and then deliver, right? So your price engine model is how you engage with liquidity, right? That's being engineered. And then if the price delivery is how you're delivering price in the overall scheme of this is my destination. I'm starting here at this place of consolidation, right? And my target is this sell side down here, right? I'm starting here, right? I'm starting here at this area. I'm starting at this area of consolidation right here. And my target is this buy side right here, right? I'm just picking a spot. It's some buy side over there that you can't see, right? So I consolidate, I expand, I reverse, I retrace, and then I deliver, right? CERR right? That's if the price delivery. Okay. Now, using this same area right here, right? Leaving this area of accumulation right there, we use the price engine model of offset accumulation, because we consolidate, took out sell side, and then traded above right there. All right. So as soon as we trade above there, the price engine model is done. The price engine model leaving this area right here is done. We know we use the price engine model of offset accumulation because we consolidated engineering liquidity on the top and the bottom. We took out the sell side, then we moved up and engaged the buy side. Offset accumulation is done. In the sense of if the price delivery, right? If the price delivery is not done until you get to whatever your destination is. And how are you getting there? Consolidation, expansion, reversal, retracement, delivery. Right? And same thing on the other side right there. All right, same thing on the other side there. And if you look at this big area here, you'd be like, okay, we just consolidating this area right here. So we got consolidation, expansion, retracement, delivery there. Right? And then it continued down because we had consolidation, expansion, right? Retracement, delivery, right? And inside this right here, we had consolidation, expansion, reversal, retracement, and then delivery right there, right? Boop, 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 boop. And it just went above that high right there, right? And then over here, we had consolidation, expansion, retracement, fake out, then delivery, right? That's because we never took out that high there, right? After we got here, right, we never took that high, right? Because wow, we was on the right side of a smaller market maker sell model right here, right? We got this huge market maker sell model here, but right there at this place where we went up here, we got this consolidation, expansion, reversal, retracement, delivery right there. That delivery right there was a smart money reversal. Smart money reversal, low risk short, right? You got this big area of accumulation here. Distribution here. Then you got this area of distribution here. Then we gone, right? Coming out of this with the offset distribution over there. Okay. And nothing about price is going to be like picture perfect to how we see it in the slides, right? When we go back and we look at the old, the old ICT, the old slides that Michael shared, the old ICT slides, right? The problem we get is that we're looking for picture perfect things. Let me see here. I want to trade order blocks. Need market maker models. Where's market maker models? Liquidity, fair value gap, swing high, swing low, mitigation blocks. Where's market maker models? Liquidity, mitigation block. Am I tweaking? Rejection blocks. I don't talk about market maker models and I want to trade. I know I talk about it in the art of reading price section. All right. Art of reading price section. Market maker models, part 2. Part 1. 2. I open up all 3 because I don't know which one it's in. Another file is still open, please. What? All right. So this is what we're looking for right here, right? We're looking for perfect market maker models like this right here. We're looking for perfect market maker buy models, initial consolidation, first stage distribution, smart money reversal, first stage accumulation, second stage reaccumulation, and then reach terminus above. We're looking for perfect market maker buy and market maker sell models. We want them to look exactly like this, right? We want them to look exactly like this, but it ain't always gonna look exactly how it's drawn out on the chart. It ain't gonna look like this right here all the time, right? This is a market maker model, right? These are your areas. This is your area. This is your initial spot here. Then you move there, then you move there, right? It's not gonna look perfect like this is here. But what you got to understand is that there's a system, there's a reasoning behind this, right? What is the purpose of, right? What's the purpose of the smart money reversal, right? Right? Who won't take a shot at who won't take a shot at what's going on during the smart money reversal? What's the purpose, what's happening, what's, I'm saying, however you want to look at it, what's going on at the smart money reversal, what needs to be, what qualifies it as a potential smart money reversal, right? What has to happen there?
So taking out some previous session or high time frame liquidity.
Yes, taking out a specific liquidity pool, right? It don't matter if it's a session, it don't matter if it's a day, it don't matter if it's a week, but taking out a specific liquidity pool. Tim, what makes it that specific liquidity pool? It just determines what the algorithm is doing at that time, right? So when you leave your initial consolidation, right? When you leave your initial consolidation, I'm cooking tonight, right? When you leave your initial consolidation here, in this case, this is a market maker sell model. Okay. So during this initial consolidation, you're letting buy stops build, you're letting sell stops build, right? So you got a liquidity pool here, you got a liquidity pool here. Okay. And if at this time, right, price is bearish, right? This is the draw on liquidity right here. But what is it going to do first? It's going to go and attack some level of liquidity. All right. Now, when you're trading at all-time highs, you don't have the luxury of saying, hey, that's the high that is going to go attack. Right? You don't have the luxury of that because there's nothing over here. But once we realize we're on the right side of the model, we now have a clear target that we can expect price to at least draw towards. Why? Because we have structure to show us what is the algorithm going to draw toward. But when you're at all-time highs, you don't have that, right? So at all-time highs, it's a little bit more difficult to identify the smart money reversal, right? But the algorithm knows exactly how far it's going to go, right? It's all kind of tools that let the algorithm know how far it's going to go. We can base it off this manipulation leg right here, right? The algorithm knows before we do, based off this manipulation leg here. And if we come back to that swing high right there, if I can get it on there, the algorithm knows that it was going to go up here, right? A half standard deviation away, right? Trade above, fail to get to 1 standard deviation, right? then respect the equilibrium between those two, right? Then turn around, right? What can we expect to happen at a 0.5, right? We can expect a retracement at a 0.5. So a half a standard deviation from this manipulation leg here, price retraced back down to that sell side, right? You say, Tim, it went above half standard deviation. You're right, because it's going to go above it so that smart money can short above a old high, right? It's going to go above that spot to short, right? But then look at what it did. It did something very peculiar, right? When we come here, right? Let's get it together. We want everything to be pitch perfect. Line it up pitch perfect, right? Okay. What did it do when it went above, right? When it went up to the lower quadrant, used it as support, went up to the 0.5, right? Made a high. Okay. Traded back down into the imbalance, went up, made a high above there, right? Right. Then came back down to the lower quadrant, used it as support, then went up, made a high. What is that right there? 1, 2, 3. Whoever heard of the 3 drives pattern, right? Whoever heard of the 3? Anybody ever heard of the 3 drives pattern? I know I did.
I
right?
heard of it.
Yes.
Yes.
So we get us
But
a 3.
is it not supposed to drive into some higher frame, like PD array, or can we just use the
What do
quadrants
we
in
just
this
say?
case?
What do we just say? When we're at all-time highs, what don't we have over here?
We have nothing to look back
We don't
to.
have any structure. So the algorithm is going to
Oh,
because
okay.
when it's going to a high, it's going to some form of expansion based off of
Yes,
a low. You see
true.
what I'm saying? It's
Yes,
like it's
yeah.
coming, even though it's coming to a high, it's going to some form of expansion based off of a low back there. Right?
Okay.
So it's the same thing, right? So now we're at this 0.5 from our overall run, right? Once we get to this 0.5, we're anticipating a retracement there. But where do we go? We go back to the 0.5 in between this range right here, right? So we go through the 0.5 and then we get a 3 drives pattern there, right? We come up there, we make a high, we make a high, we make a high, and then we break down, right? Once we make them 3 highs and break down, what happens, right? That right there was our smart money reversal. How do we know? Because we poked above this high and smart money got short right there. That's a turtle soup, right? Smart money got short right there. And now that smart money got short right there, we displaced down, right? We got a breakaway gap right there. Okay. We got a bearish fair value gap right there, right? Where is this bearish fair value gap created? Right there on that lower quadrant of this dealing range right here. Okay. We trade back up into it. We consolidate there right on that dealing range. Look at how the bodies are staying inside that SIBI right there. Okay. Inside there, trade up, right? What do we trade up to? We come up into this bearish order block right there. We come up into that right there. We got us a whatever mitigation block. It's inside the thing there, so I really don't care. But we trade up into that bearish order block right there. Then we drop down, right? We come down there. When we trade back up again, what don't we do? We don't take that high. We don't take that high, right? We don't take that high, right? And then we drop down. Where do we drop down from? That 0.5 right there in between that area there. Okay. So, but all in all, we stop going up at this 0.5 right here. This is what the algorithm intended to reverse it. But what don't we have up here? Structure. So what did it have to do? It had to build new structure up here, right? So that we can have a smart money reversal, a break in market structure, and then we continue our way back down, right? And you notice all of it is happening right there on that 0.5 right there, based off of this low over here. And what is that? That's our manipulation leg. When we first, this is what started this whole move up right here. See this drop down there? We took out all this sell side and this started this whole move all the way up there, because that's our manipulation leg right there. Right?
So the manipulation leg, you should just choose the deepest leg, or the one, I guess, that takes out the liquidity
There's no
before the
absolutes.
run up.
There's no absolutes. You have to look at what is price doing right now. What is price doing? Am I manipulating sell side and then, or manipulating buy side and then getting a break in market structure?
Sure.
Right? Because that's why I say it depends on what price is doing, because we got manipulation here, we got manipulation here, we got manipulation here, we got manipulation there, right? And it ain't nothing wrong if you come over here and want to use this right there. Why? Because you got an intermediate term low sitting right there, so you can use this right here to project up, right? The closer, the farther away from your destination you use, right? Well, using this right here, the farther away I get from here, the less accurate it's going to be, because now the algorithm is starting to do other things that can give me a more accurate shot up here. Like, just say if price would have kept running all the way up to this 2 standard deviation, it's something that can happen in price right here that can give me a more accurate target than this low down here, because it's getting farther and farther and farther away, and the algorithm has started to do new things, just like when we got the 20, 40, and 60-day look back, right? The algorithm is doing new things and it's looking back 20 days first, right? So when you look back 20 days and then 15 days go by, now that 20-day look back that you was initially looking at, that's probably in the 40-day look back or the 60-day look back. And so when the algorithm look back, it's looking back 20 days first. So if it's something that's appealing 20 days back, it'll react off of that 20-day back thing. Does it negate the 40-day or the, matter of fact, because this low right here, that was our initial 20-day look back. But now to this day, from when we first started looking, that low is now in the 60-day look back that we just took. But this was originally our 20-day look back, right? And if we go to the daily time frame right now, right, and when we started looking at this, right, if we turn on our 40-day look back, this was initially our 20-day look back right there, right? Let me hide all this other stuff. Got a lot going on. All right. So this was our initial 20-day look back, because we started watching it somewhere around here, one of these candles here, right? We're just going to pick this candle here, right? So this was our initial 20-day look back. See, that's 20 days, that's the lowest low and highest high 20 days back, right? And then if we come 20 days forward from that day, right, we've intact that low within 20 days, right? Do we have to get to that low? No, we don't have to, but that's giving us a high and a low to look for price to try to engage within 20 days, right? But as price keeps moving forward, right? As price keeps moving forward, if we come to today's trading, right? It's 30 days back, right? It's 30 days back. So now that's within the 40-day look back, right? From today, from right now today, this is within the 40-day look back. But when we first started watching it, it was in our 20-day look back. So this was the high and this was the low that we had on our radar as far as liquidity pools to be seeking within the next 20 days. And then this one here, as Michael say, delivered like gangbusters, right? Delivered like gangbusters because it delivered in 15 days, right? From the day we started watching to the day it delivered in 15 days, right? So, but when it comes to the concepts, it just depends on when have I started watching price, right? Did I start watching price today? Did I start watching it last week? Did I start watching it 2 hours ago? Did I start watching it 5 minutes ago? Right? Whenever you start watching price, you want to get yourself acclimated to what is going on. What is price drawn toward? What has price done? And sometimes, right? And sometimes, like, because we've been watching the NQ for years, right? It always seemed like we're on the right side, right? Of the trade, should I say. It always seemed like we're on the right side of the trade. It's not that we always get it right or we just perfect. It's just that we've been watching it for so long, right? We're in tune with what the algorithm is doing. Because if you step away from the NQ for 6 months and then you come back, you don't know where you are in the sense of price delivery or order flow. Then you got to get acclimated to it. Because if we just we don't know nothing about what's going on in price, right? And we just looking at this right here, and we'll be like, okay, I see we up in extreme premium, right? We've taken out some sell side right there, right? Then you'd be like, I might want to look for a reason to short right now. But since we've been in touch with it, we now know we just completed a huge market maker sell model on the higher time frame, right? And the overall higher time frame is bullish. So now that we've reached Picasso house, now we know we need to wait for more information to see if this here is going to end up being a smart money reversal, because we just completed a market maker sell model, right? So now it's like we start the process all back over again, just like we got here. And we had a couple of days of pullback. Now it was like, hey, we watching to see if that's our smart money reversal. Right. And then we traded down. Right. It was like, okay, when we came down here, it was like, if we don't trade back up there, right, that's going to be awesome. We know that's our smart money reversal. Kept going down. Right. Now we're looking for, right, we're looking for our chance for a low risk sale. Right. We come back up to this upper quadrant right there. That's your low risk sale. That's the least amount of risk in this range for that being your target, right? Because selling there, putting your stop there, and going there, that's the lowest amount of risk you're going to incur for this implied dealing range right here. Because when we run these quadrants, it's not for this side of price, it's for this side of price. Right? Once we get our low risk sale, came down and took out that low right there, right? We go into our area of redistribution or distribution, whatever you want to call it, right? We trade up, get our offset distribution and our low resistance liquidity run into the terminus. All right.
Mm-hmm.
And what is it basing it off of? What do we say? We're looking for our trading opportunities in between these quadrants right here. Where's the trading opportunities, right? Low risk sale. Coming off the offset distribution at the upper quadrant, at the equilibrium, You even had a short-term sale here off the upper quadrant, right? Because when we came down here, right, and set that SIBI right there, right, we traded back up to that upper quadrant, traded down to the lower quadrant, went back up to the upper quadrant again. So you had a shorting opportunity there, a shorting opportunity there, a shorting opportunity there, right? 3 shorting opportunities within this dealing range, right? On this daily time frame right there. All right.
But can we consider that now a potential change in the state of delivery? Now we've taken out the October 10th low. We wait and watch to see, like, is um essentially is actually, I'm not sure. Now that we've taken out that previous swing low,
Change in state delivery don't come off of lows. It come off of opening prices.
opening prices, of course, yes, so bullish
Yeah, the opening
order
price of
book.
the order block.
Yes,
Okay.
okay.
Change the state delivery come off the opening price of an order block, right? You have 5 million change in state deliveries a day, right?
Mm-hmm.
For but
Like that one.
when this candle here came above that opening price, well, actually this because it's two candles here, right? Once this candle here offered that price right there, right? Right there, it's hard to see, but when we
Mm-hmm.
come there, that little poke above that line right there, that right there was a change in the state delivery
Right,
right
for
there.
the bullish order block for that
Yeah.
side. Okay,
Mm-hmm.
okay.
Because that order block right there, right? We got a change in the state delivery there. Then we traded down into that order block, proportion block, because it's inside of this order block, right? Created another order block there, and price kept going up, right? Then when we're coming over here on this side, when price offered that price right there, that was a change in the state delivery.
Got it. Okay.
Right, right there is when you trade through that order block, right? That should change the state of delivery. Now, this order block right here, that's a propulsion block because it's inside this huge order block right here, right? So when you trade through that, that's a change in the state of delivery. All right, when we come down here and we offer this price here, because this is an entire order block right there, that's a change in the state of delivery right there for the
I see. At the
overall.
opening, yeah.
Yeah, for this overall move, this move up, then down, right? That right there, if you want to call it an official change in the state of delivery, because this is when price is going up, right? Price is
Mhm.
bullish here, right? You got this huge order block because they're just consecutive up close candles, right? Even though we know, okay, this is a change in state delivery here because we got a propulsion block inside of this bearish order block, right? But if you don't know about a propulsion block and you only see, okay, this bullish order block here, right? Once you offer that price, that's a change in the state of delivery.
Okay, got it. Thank you.
So it's not that when you hit lows, that's a market structure shift, a break
Yes,
in market structure,
like a market
something like that right
structure.
there. Mm-hmm.
Okay.
So now on the daily time frame, yes, this right here constitutes a break in market structure. Right on a daily time frame, we got a bearish breaking market structure at that low right there, right? And whenever you get a bearish breaking market structure on a time frame, you want to know, does the higher time frame allow for that? Does it make sense for the higher time frame to come down here, right? So if we go up to a monthly chart, right? If we go up to a monthly chart, we can see that the monthly chart here, right? We have right. So when we look at this entire move up, right? This is our entire move. This is our latest expansion for our overall dealing range, right? That's our latest expansion for our overall dealing range. Okay. When we look here, we see we offered buy side delivery, sell side delivery, and now we left that area there, right? So looking at when we what we're doing here, right? Looking at the displacement here, right? We got displacement here. So this imbalance right here is when we're leaving this area, right? So this right here is your true fair value gap. And the reason why I say your true fair value gap, that's just a term that I just call it myself, right? Is there a difference in there? Close at 94.50, open at 89, so no gap there. All right. So that's your true fair value gap right there, right? Now we have this consolidation here, right? We've offered buy side, we've offered sell side, and this right here is when we're leaving this area right there, right? That's when we're leaving that area. So you can focus from here to there because this is a balanced price range. And so you're not focusing on that low right there. You're just looking at from this is a balanced price range. So this is in from here to here, we're inefficient sell side delivery, right? All of this right here has been offered fair value, fair delivery on both sides, buy side and sell side. So from this candle up, right, it's inefficient sell side delivery. So you're looking from there to there. Okay. So we have this fair value gap coming out of this consolidation, right? We want to see that act as a breakaway gap. And up until now, it has, right? We created it, never traded back to it. Breakaway gap, we extended up, right? Had an opportunity to create a BISI here, traded back down into there. So now we're watching to see if that October candle is going to act as an immediate rebalance where price continues to get up out of there, right? Instead of doing a deeper retracement, does it continue to get up out of there? All right. So now looking at the monthly time frame, right? Where have we traded down to, right? Below that low right there. We've come down to an area of fair value. We've come down to equilibrium. So right now at this point in time, right, the algorithm has come down to a place of fair value where it's okay to buy for, you know what I'm saying, in the terms of, are we in a premium? Are we in a discount? For the area that's lacking its inefficient sell side delivery, we've come to an area of fair value. So the monthly time frame had a reason to come down here. This is fair value for the monthly time frame, right? There's also an inefficiency down here on the monthly time frame, but what do we say? We want to see that be a breakaway gap. So we don't want to see that touched, right? Right now, it hasn't been getting touched. Okay, so since the monthly had a reason to come here, then it's okay for the daily to get a bearish breaking market structure, right?
Tim,
Yes.
for that BISI, we wouldn't take it up to the opening price. Want us like a teeny tiny gap there. Go back to the monthly.
I'm here.
Oh,
yeah,
right there, that BISI.
Now I looked at the price. This closed at 94.50, and this right here opened at 89.50. So they're overlapping. This open is lower than that close. There's no gap there.
Okay.
All right. If I stretch that out, see there's no gap there.
Even at the bottom too, that I think I couldn't see. Yeah, there's an overlap. Oh, I see now. Okay. And the other thing that confused me was why we didn't mark the other fair value gap, but you're saying it has to leave the balanced price range.
How about this right here?
And yes, that's why we have to mark our dealing range from when it leaves the consolidation.
Because this isn't an ICT fair value gap. that's just an inefficiency. That's just a fair value. That's just a normal gap. This is just a general gap, right? This is not an ICT fair value gap because it's created, right, inside an area of efficient delivery.
I see.
You see what I'm saying? We've offered buy side and sell side all up and through here. So when we create this just common gap right here, this isn't an area of fair value. You see what I'm saying?
It's already balanced.
It's an area of efficient delivery. But when we leave here, when we leave this area, now it's there's a buy side imbalance, right? It's an imbalance of buy side. It's only buy side delivery leaving this area right here. So at this point here, if you come back down and offer sell side delivery, right now you're coming to an area that's lacking in it. Now this is an area of fair value because when you come back down, if you come back down into here, right, you're coming back down to an area of fair value to offer sell side delivery. And if the algorithm wants to come back here, it's coming back to an area of fair value where it's okay to buy, right? And so, but when you're leaving this area of consolidation like that, right, if price is exceedingly bullish, you don't want to see that gap coming out of there be retraced back to. You want to see it act as a breakaway gap, because you're breaking away from this area right here and you want it to go form new structure for you to work off of. You see what I'm saying? And so once we break away from there, right, what do? We come down and get an immediate rebalance here because we had an opportunity to create another BISI there, but we traded down into that candle there, never touched our breakaway gap, right? And then price took off again. So that was an immediate rebalance. And what he said about immediate rebalances is a very strong signature, right? So then we come back here, right? Got another potential rebalance. And then now we've come all the way up here, like we said, based off of when we looked at whatever we marked out over here. I can't remember. We marked out something over here on a lower time frame. We had come up to an area where the algorithm, it had come up to a point where the algorithm could retrace. It was like a 0.5, right? And then we went 0.5 in between the next deviation. And then we got this pullback and it came back down to this area of equilibrium, this area of fair value. And now we've taken out that sell side liquidity, right? Can it keep coming down to this? Sure, it can, right? But if price is exceedingly bullish, now that we've come back down to this area of equilibrium, right, this would be a good time to turn back around. Why? Because we had immediate rebalance here, right? A potential immediate rebalance there, a retrace back to an area of discount based off of our dealing range there, coming out of here, came back to an area of discount there. Okay, so that'll be right here, would be a good time for price to go back up if it's really bullish, right? And when we look
so
at
just to be clear, Tim, go back for 1 second to that monthly. The one, that candle, since it was responsible for leaving that area, we anchor our dealer range to the bottom of that one on the candle responsible for like breaking that structure, leaving that area, correct?
Yes, when we're leaving,
Okay.
when we're leaving this area, right?
Yeah.
This is the candle. This is the candle that's letting us know that this is a balanced price range now. So we don't want to be coming back down inside this balanced price range, including it in our expansion, right? We just
because once we over that last bear, that top bearish candle, like you said, we left it. Once we went above that signal, right?
Mm-hmm.
Okay.
Once we leave in this area here, right? We just want to look at the side that's expanding out, right?
Okay.
Because the side that's expanding out, right, this is the side we want to look for our opportunities inside here, right? If
Okay.
it's if it's low resistance liquidity run, right? If we start digging back down into here, that's no longer a low resistance liquidity run, right? You
That's high
already,
resistance because that
yes.
area was balanced before.
This
Okay.
area, and you
Okay.
want to see that act as support. You don't want to see it digging down in there. That's why you're only looking in this area for your trading opportunities, right? And then we look at the monthly had a reason to come down there, okay? And then the weekly, on the weekly time frame, the weekly had a reason to come down there also, right? Because when we look here on the weekly time frame, as we can see here, right, we have, yes, there it is. We got a weekly fair value gap there. Is there a gap there? No, it's not. No, it's not. All right. So there's a weekly fair value gap there also. So the weekly got an imbalance to come back to right there at that same low, right? So the weekly time frame got a reason to come here. The monthly time frame got a reason to come here. So on the week, on the daily, that bearish breaking market structure is warranted, right? And right here, Michael taught this before. This trading below that low on the weekly, that's not a breaking market structure. That's not a market structure shift, because this swing low right here is inside of that imbalance right there. This would be your market structure shift on the weekly, right? Because this low here is a part of the structure that was created, right? We got this consolidation. We come up. So now if we come back down here, that right there is a market structure shift. This right here, that swing low is inside that imbalance right there. So that's not a market structure shift on the weekly time frame. All right. But the weekly,
That's really useful, showing the structure and what it's actually breaking.
yes. So the
Yeah,
weekly
right.
had a reason to come there, right? The monthly had a reason to come there. So that daily bearish breaking market structure is allowed, it's expected, right? This is what I be talking about. I be like, if the higher time frame got a reason to come there, we're expecting to have a breaking market structure on the lower time frame, right? That, and that doesn't mean we're just going to go to Hades. It's just that's expected, because the higher time frame has to get their retracement in order to keep going, right? And then now at this point is when you start to watch and say, hey, are we continuing to look bearish, right? And right now, I would argue to say no, right? Looking at the weekly, because when we left going up, right, we created imbalances, but as we came down, we haven't created one fair value gap yet. All right. We haven't created a fair value gap yet. Right. So until we create a weekly fair value gap, right, I'll argue to say that the weekly is still respecting the buy program, right? Because all we're doing is retracing on the weekly, right? Just because we retrace don't mean that we're disrespecting the buy program. We got a reason to come down here. We got a weekly imbalance right there that we came down to. The monthly got a reason to come down there. The weekly got a bullish order block right there, right?
Mm-hmm.
Now, if the weekly start losing this bullish order block and come down here and get a break in market structure, right? The monthly still has a fair value gap down here that it can come down to. So now the weekly is getting a bearish break in market structure, but the monthly is just still obeying bullish order flow. Why? Because that's our discount imbalance right there on the monthly time frame. All right. It doesn't kill the buy program on the monthly or the weekly, really, to come all the way back down there. Is that a whole lot farther than I would expect it to go during this time of year? Yes. Right.
So
Because
essentially, the retracement can go all the way without taking out the April lows. Essentially, we're still in the bullish billing range until.
because if we came all the way down to consequent encroachment of that fair value gap on the monthly, right? That'll give us like a 15% retracement on the NASDAQ from all-time high. Right? A 15% retracement from an all-time high, and from the highest close, it'll be a 13.5% retracement, right? And that's just a correction. You know what I'm saying? That's just a true correction. So, you know, who's to say that we can't get a correction when everybody expecting a Santa Claus rally? You know what I'm saying? Hey, we could get it. Do I think we'll get it? No, because when the market start dumping too much, you know what I'm saying, people go to panicking. Oh, the world coming to an end. Oh, this, right? You know what I'm saying? Don't nobody want that on their watch, right? But this is the time when we, you know what I'm saying, we're at, right, an anticipatory reactionary point. We just finished a market maker sell model, right? Now this is the time when we start looking for signatures. Are we getting a smart money reversal, right? And if we get something that look like a smart money reversal, right, do we get a low risk buy? Then if we get the low risk buy, then we'll know we're on the right side of a market maker buy model, right? We'll know, okay, now we're on the right side of a market maker buy model. We start the process all back over again, right? Same thing we do on the higher time frames, the same thing you do on the lower time frame. Look, say, okay, is that a smart money reversal? If it start going up, okay, potential smart money reversal because we traded below a low, right? If we come back down, don't take that low out, then we trade back up and break above that high. You know what I'm saying? Then we could be like, okay, now we got an important low right there. Now we got an intermediate term low. That was our low risk buy. Now we're on the right side of a market maker buy model, and I'm looking for reasons to buy in a discount until I get back up there. Make sense to everybody?
Yeah.
That really ain't what I was gonna be talking about tonight, but hopefully y'all got something out of it. I'm kind of tired of talking now, so we're gonna look at today's price action. Today price went up overnight, and then this morning when we went into the New York session, right, we kind of hobnobbed a little bit, and then dropped it like it's hard, and then completed the market maker sell model on the between 3 o'clock and 4 o'clock. Right? Did anybody trade today? Marco said the students cooking tonight. Great questions. Did anybody trade, demo, live, whatever? Anybody do any trading today?
Yeah, a little bit this morning. I'm trying to with my model to go check out that pre-market high, and it was very volatile. So
did you get chopped up? Did you get chopped up this morning?
I got chopped. I sat down, and then once we turned, I got a little bit coming down towards that the last part of the trade.
What time frame you be looking at? What time
I
frame
be
do
looking
you
at.
watch primarily?
I'll watch the 1 hour to 15, and then sometime I go down to the minute, and I think that's what's killing me. Yeah.
This is a 1 hour here.
I was on the 15 mainly though this morning, and so I had my pre-market high and pre-market low. So my real bias was that we would go take that pre-market high and that engineered liquidity up that before turning, but it just started chopping.
9:30. All right. So that's our 9:30 open right there. Okay. This is our 9:30 open. All right. This right here, 7 o'clock. All right. This is our pre-market low. So our pre-market low right there.
Who? Oh, down there talking to Tim.
You're talking to Timmy.
Sorry.
Nobody said nothing to me.
No, I said Tim. Somebody was asking me a question.
Oh, they said talking to Timmy. Oh, wait a minute. Ain't nobody say nothing to me. You tripping. So So that's our pre-market high. That's our pre-market low. Okay. Let's go to regular trading hours. All right. So on regular trading hours. Here. That is lunchtime high from the 14th. And looking at that day, that's a daily high from regular trading hours.
It's a Sibby up there with the high at a new weekend opening gap. So my bias, like I said, was at least to get there before turning down with the London lows and stuff. But
be quiet. Be quiet. All right. That's a lunchtime low from yesterday. Then that's Tuesday. Right. So that's the buy side. That's the only buy side before 9:30. That's above us. We got some more buy side up here on like a morning. Right. So we got some buy side up here from a morning on the 13th. And this right here is from the 14th. 11:14. This right here is from the AM on the 13th. Jesus Christ. AM on the 13th. All right. So this is like buy side. That's above us before we get there. Right. Now, when I was telling you, shh, be quiet. Right. The reason why I'm saying that is because right here at this buy side is a quadrant from our look back, right? And price has come down to our lower quadrant. So we're below, so we was above it, we got below it, right? Used it as resistance, went down, right? Then came down and got below here, okay? And then, right, hung out here, and now our draw is right there, right? So if our draw is there, right, this is our lower quadrant. What can we anticipate when we get to our lower quadrant sometime? A deeper retracement, right? If we get a deeper retracement and our draw is right there, we don't want to see price coming all the way back up here. That wouldn't be low resistance, right? So we got this buy side and this buy side, right? But putting most of the focus here because we want to see this act as heavy resistance, even though we eyeballing that. Okay. Now, I ain't gonna worry about none of this sell side there because that's our draw. Okay. Go back to electronic trading hours. Okay. So here on our 15-minute time frame, I'm gonna cut some of this off. I'm going to cut it off at I'll cut it off at lunch. Not lunch too far. Yeah, I'll just cut it off at lunch. Yeah, I cut it off at lunch, right? To incorporate the London close from like 11 to 11:30. Right. So I cut it off at lunch. Now, so 15-minute time frame. Okay. Just looking at the 15-minute time frame, right? This is when I said the morning was garbage, right? This is that area there where the morning was being super trash, right? It was being super trash in here. When I shared the post, I was like around about 10:30, 10:45, price started to really clean up, right? So now, looking at this here, walk me through what you were saying about it was a SIBI and something that you was expecting price to draw into, right? Walk me through that.
It's a SIB, the SIBI right up that area you just scooted past.
What time frame?
15 minutes. So it was
over here somewhere.
My chart quick.
Over here or over
yeah,
here?
Hold on. I'm gonna go to my chart. Let me look at my chart so I can tell you. It's the
I got a 10:30 SIBI on the 13th.
Oh, I'm tripping. Yeah. Did I mark it wrong? I must have marked it wrong. But it was, even if it wasn't that, I still had that high of that new week opening gap in that engineered buy side up there.
Which new week opening gap?
It's a new week opening gap high from.
What's the date?
I'm gonna go to it because I used lines. I didn't put a date. Let's see. It's from the week of the 9th.
That new week opening gap there?
Let me make sure. Yeah. I have lines on.
Okay. So new week opening gap. All right.
And we had we had closed over the low and the pre-market high, and the pre-market high and that high was there. So a bias was a high probability run into that before going
right
down to take out the low. That new week opening gap high.
The high of the new week opening gap.
And the pre-market high. Yeah.
Now the pre-market high is here. Mm-hmm.
Right. And then a new week opening gap high is right above it.
So from this right here to that right there, that's what you're looking at there.
Yes.
All right. So nothing wrong with, you using the pre-market high and the new week opening gap high, right? But when we going into a new anything, what are we focusing on?
Right. The previous session stuff. Yeah.
The previous session, we looking at liquidity.
Yeah.
Right? We're looking at liquidity right now. This right here, right? When price opens up, right? Matter of fact, all of this price from overnight, this is when we opened up, right? This is where we opened up. This new week opening gap, where is that in reference to price when we open and when we open at 9:30? Where is that in reference to price?
When we open at 9:30, it's above it.
Above it. And when we open at 6, it's above it. When we open at midnight, it's above it. So if a PD array is above us, right, and we're in a sell program, what do we anticipate that PD array to be?
To either be left open or act as resistance.
Yes, resistance. So now we're looking for this to act as resistance because it's above us.
Right.
Right. Now we got buy side liquidity resting there. It's below consequent encroachment. We got our equilibrium of our dealing range, right? It's inside there resting just above consequent encroachment. Okay. And then, like you said, when we opened up, right? When we opened up, what do? We traded down into the order block, right? Got an indecision candle. Then we opened up, right? Used the wick as support, traded to the order block one more time. Then we rallied up and we took out the buy side liquidity, and then we closed right at consequent encroachment, right? Closed right there at consequent encroachment after like wicking up above there, but not touching that regular trading hour buy side. Okay. Then we open up and trade above that regular trading hour buy side, and then we dump and drop close respecting the new week opening gap. All right. And we trade down respecting the new week opening gap. All right. We come all the way down here, get a nice closure, right? We get a nice closure down below that order block right there, right? So right there, we get a nice closure there below that order block, right? That right there officially gives us a change in the state delivery. Okay. Got to change the state delivery. And then and then also this right here, also, this is like incorporating the macro time, right? So inside of the macro time, we're trading up above liquidity, right? Spiking up above that liquidity over there, and then dropping down, getting a change in the state delivery, right? All the time, we're still respecting the new week opening gap, right? So we're not showing a willingness to displace above that high. Yes, right. We don't never want to get so caught up in, oh, we closed above. We want to look at what is price doing, right? Is it displacing past this, or is it just manipulating it? Is it just wicking? Is it just barely getting above, right? We don't want to get so caught up where we go zoom all the way in and be like, oh, look, we got a closure above consequent encroachment, right? Yeah, we closed slightly above consequent encroachment right there, but it wasn't no commanding close past that. It ain't like we closed all the way up here above the upper quadrant, right? Because what we always do, we put grids on everything, right? We put grids on everything here, right? And look at the highest close, right? Where the highest close at. We're not closing above that upper quadrant, right? Go there, consequent encroachment, right? Touch the upper quadrant, dump, respecting it, right? Come back up, right? Here. Now, this right here, what do we say? This high here, right? We took out this liquidity there during this macro time, right? During this macro time, we rushed up above the pre-market and above that right there, right? We come back up here and take out that macro time high right there, right? After we got that change in the state delivery right there. So we go up, we manipulate out that high, and then we dump, dropping right there, right? This drop right here, right? That drop right there, we come all the way down through all of this consolidation, closing past all of these bodies right here, right? Flushed, complete flush out of there, right? And then now price just go non-stop dropping, right? And that's just on the 15-minute time frame. 15-minute ain't giving you no look at nothing, but the 15-minute is showing you what the algorithm is trying to do. Because look at how we moved up into that buy side, right? When we went up into that buy side, it was very efficiently delivered. And even when we closed above that pre-market high right there, we didn't do so in a commanding fashion on this 15-minute time frame, right? But as you notice here, when we went to that regular trading hour high right there, right, and we got that little slight closure above it, right, we did not close above the upper quadrant of that new week opening gap. And then what do we anticipate at those upper quadrants? Possibility of a deeper retracement. Touch that upper quadrant, deeper retracement. Touch that upper quadrant, super deep retracement. All right. So it's like the 15-minute is telling you, right, I'm not trying to go up at all. Right. It's showing you I ain't trying to go up at all. Right.
Yeah. So that's don't even have a bias of, like I said, I knew my bias was bearish today, but I was trying to take the quick scalp to, like I said, but it's best just to wait and let it play out. What you saying too, right?
Yeah, that too. But like, even if you're in here trying to find a buy inside here, right, we're anticipating this to act as resistance. So trying to shoot for a high above this is going against what you've already established. If you already established we're below this and I'm anticipating this to be resistance, I'm trying to force my will of pushing through this resistance just to get a scalp to that high right there. This high is above what I've already deemed as resistance. So
okay, and that's where I got to remember, instead of remembering that it's resistance, I looked at it as a quick catching people with stops up there, as a quick run up, snatching. But I keep, I definitely forgot. Look at it as resistance.
Yeah. So if you got this on your chart, right, it ain't no reason why you should have been looking for this high, because that high is outside of what you've already deemed resistance, because we're below it, and now we're below it in a sell program. So we don't want to see price go back above that. And where is it created? Right there on that quadrant. You see what I'm saying? So we got all this confluence where we're coming from the lower quadrant back to equilibrium, right? And we're right there at our draw. So we don't want to see price pushing past this equilibrium, right? Because that wouldn't be low resistance. Liquidity, that wouldn't be a low resistance liquidity run, right? And then so we got a new week opening gap there to act as resistance. So looking for anything above this new week opening gap is really asking too much of the algorithm, right? You're asking it to go against what you've already deemed to be resistance. Okay. And then even if we look at the 1 minute time frame, right? If we look at the 1 minute time frame of this same time window here, from if my phone dies, thank you so much. Okay. All right. So we're gonna wrap it up here with this right here. If we look at our 1 minute here, right? The 1 minute is giving us valuable information, right? What is the 1 minute giving us, right? This is our 9:30 open, right? We get a bullish first presentation right here at during the 9:30 opening range. All right. So we go up here and we take out the regular trading hour high right here, right at our what's the name, and then we come and get a bearish first presentation during the 10 o'clock opening range. All right. So now we got a bearish first presentation during the 10 o'clock opening range, and we got a bullish first presentation during the 9 o'clock opening range. All right. So we come up here. Once we take that liquidity, we drop down here and we got relative equal lows, right? Because here we took that low. So now this is the low we focusing on, right? We come here, we come down, and we engineer sell side liquidity, relative equal lows there. Once we engineer these relative equal lows, we come back up, right? Trade up into the first presentation there, use the 930 first presentation as support, make our way back up here, right? And we trade up and we take out that high, right? Over here, right? We take out that high right there. That's that high that was made during the 950 to 1010 macro. We take out that high, right? Once we take out that high, yes, we close above this high right here. But look here, right? We close above it, then we immediately come back down. We're not displacing away. We close above it and we immediately reject it, right? Once we immediately reject it, right, we come down into this BISI right here, right? And then we trade up, then we drop down and we close, creating. And that, what BISI is that? That BISI is the first BISI that was created when we went up, took out that liquidity, then we came down here and created this inversion right there. As soon as we created that inversion right here, right, we traded back up through it, kissed that quadrant level, and then boom, price is gone. We drop down, right, trade all the way through our first presentation, and once we got down here, closed that low right there, right, we never got back up to consequent encroachment, right? Came here, opened, dropped down, never tried to trade back up into it. Open this candle up here, right? Drop down, close there, but we never got back up to it, right? When you're above a bullish PD array, what do we want to see? We want to see the lower half be defended, right? As soon as we trade down into it, we wick down into the lower half immediately, come down and close deep inside the lower half, like probably down below the quadrant, right? We're not defending that lower half, showing weakness. When we was coming down into this PD array here, what do we want to see? We want to see the lower half be defended. Didn't even try, traded all the way down, closed all the way at the low. Didn't even try to defend the lower half. So it's showing you, boom, I'm going, I'm weak. I'm going to use this as a reclaimed SIBI right here, right? It's giving you a lot of signal. That's why I say from during this time, from like 1030 on, price got real clean. And this, all this over here, sloppy, deep retracements, right? It was sloppy here, sloppy there, deep retracement here for nothing, right? But right around this time here, price started to clean up right here, right? Here's 1030 there. Price got real clean, right? Real, but all of this right here, nasty work. But yeah, whenever we're watching price, okay, even if we're trying to force that high, right? Even if you're not aware of what's going on and we're trying to force that high, right? Okay. That's the high that we want. Okay. Even if we look, even if we like, oh, I want this right here. What inside here on this 1 minute time frame said buy anything to go there? Nothing. Nothing in here. Once we got here, there's nothing in here that said buy to go there. Now here, you came up, you set the high, you traded back down to the order block, right? You say, okay, I'm gonna buy that fair value gap, I'm gonna buy that order block, whatever you're gonna buy, right? Once we come back here, right? Once we took that high, right? Price dropped all the way back down there, right? Then we traded back up without creating any fair value gaps, poked above that high, then price dropped all the way down there, right? Nothing inside here on this 1 minute, this 15-minute time frame that says buy and go there, right? So now we're going to look at this same little area here, right, on the lower time frame, right, on the 1 minute. Look at the same thing on the 1 minute here. Okay, so on the 1 minute here, all right, so this is the 9:30 open right here. We open here at 9:30. Total slop there. Blast up, get our first presentation. Okay, you say I'm gonna buy this first presentation here, right? Now, the way Michael teach it, that's the low there. If you use this low here, you got stopped out immediately, right? This right here, right there, that's your true mandatory stop. But the way Michael teach it, that's your mandatory stop there, because he always teach the low of the first candle or the high of the first candle if you trade in a fair value gap, right? Your safe stop is down there. So if you're going below that right there, because it was some volatile times, because from there all the way down to there, that's a 30-point stop there. Volatile this morning. As I said, it was very volatile this morning, right? So if you buying this, right, once we got up here, look at how we're moving, right? We come here, we got the possibility of creating a BISI that big, right? We trade all the way back down. So now what we're looking at, is this going to be an immediate rebalance? Next candle shucking and jiving. Next candle shucking and jiving. At this point here, like, nah, there ain't no immediate rebalance there, right? Because while on immediate rebalance, that's a strong signature. You want to see price this candle at the latest, that next candle getting on up out of there. Okay, nah, that's not an immediate rebalance. Okay, then we come up here and we take out that high. What do? Reject off of it, right? Trade back down. Got our opportunity to create a small BISI. Trade back down. Is this going to be an immediate rebalance? We can't even take out that high. Drop down. Nope, that's not an immediate rebalance, right? And then we come and create a SIBI inside the 10 o'clock hour for our first presentation right there, right? So nothing in here so far is saying buy to attack that high right there. All right. So we come down, like we said, we engineer liquidity there. So we trade down, engineer sell side, right? We trade back up here, trade above this high there, right? We get a closure up, right? Trade back down, got an opportunity. Is this an immediate rebalance? Because we got an opportunity to create a BISI there, right? Is this an immediate rebalance? Next candle shucking and jiving, next candle going down. Nope, that's not an immediate rebalance there, right? So trade back down here. If you buy that BISI right there, right, on that trade back down, if you buy that BISI right there, right, if you took that low, you immediately stopped out. Took that low, you're still in there, right? Then price trades back up. It can't take out that high. Then it immediately drops down and creates a SIBI. At this moment here, if your stop is there, you already know it's coming for me, right? Because we failed to take that high, and now we created a SIBI right there. So now that high right there is your smart money reversal. That high right there was your low risk sell. And now you know it's coming for me, right? And then not only do you create a SIBI there, we create another SIBI in line with our first presentation right there. And we push through our first presentation without even trying to defend the lower side and back it up with another SIBI right there. So now we got confluence inside there that low risk sell is not going to get traded back to, because we got a breakaway gap, right? And then we got a fair value gap that's leaving all of this efficiently delivered price up there. Okay, so nothing about price outside of maybe if you just extremely bullish for whatever reason to go there, right? This is the only time where I can sort of see anybody trying to take a buy here if you were totally unaware that this right here is supposed to be acting as resistance, right? And then what do we always say? Whenever we're consolidating, right, and we break out of that consolidation, we don't want to see price just coming right back into that fair value gap. We want to see that right there act as a breakaway gap. We want to get a fair value gap, then another fair value gap, and look for price to trade back into that one. But when we come out of there like that, stop, and then immediately drop back down in there, not a good sign, especially if you're at an anticipatory reactionary point. Right. I'm tired.
Thank you.
I'm tired now, and my wife in there cooking, and it's smelling good. If y'all got questions, I'm sorry. I'm tired of talking. Hopefully, y'all got something out of it. If you got something out of it, do me a favor, hit the like button and share it with somebody who you think will get something out of it. Right? Share it with somebody who you think will get something out of it. Why? Because I believe that these ICT concepts are the best thing that you could ever have in your arsenal when it comes to trading and investing. I've traded many different concepts. I've traded moving averages. I've traded indicators like RSI, MACD. I've even traded trend lines. Somebody was teaching me how to trade trend lines one time. Shout out to the professor. The professor was trying to teach me how to trade trend lines, but there's nothing that I've come across that can compete with these ICT smart money concepts. This is how the market books price, right? There is so much to study in this video. I'm glad you found value in it. Spam bot. Y'all shout out the spam bot, man. The spam bot holding down to #1 spot. Hey, look here, man. For those that watched my video about Tradeify, I requested a second payout through them, and 2 for 2, man. One business day, the money was put into my Rise account, and the next morning it was in my bank account. Right, I requested it. My first payout I requested on Friday, this past Friday, right, at like 7:45 at night. Monday evening, the money was in my Rise account, right? So that's the next business day. So Friday night, Monday night, it was in my Rise account. Tuesday morning, it was in my bank account, right? Tuesday, what's the day? Thursday? Yeah. Tuesday evening, I put in my second payout request, right? Wednesday night, it was in my Rise account. And then this morning, it was in my bank account, right? So right now, hey, 2 for 2. 2 for 2 trade. If I've been doing anything, like I said, I don't have an affiliate link for them. I just was sharing my thoughts on, you know what I'm saying, their payout process, right? I still trade Apex, and right now I'm trading Apex and Tradeify, right? And along with my own capital. So
You using a copier, or you just like each day you go and wanna? Okay.
I use a copier. If I trade more than one account, sometime I'll use a copier, and then sometime I'll like if price looking trash, I'll just trade one account, no matter if it's in Apex, Tradeify, or my personal account. If it's super trash, I trade one of the prop accounts, right? When it cleans up, then I'll use a copier, and then I never trade like all the accounts at one time. I'll be like, okay, I'm gonna trade 2 accounts today, or I'm gonna trade 3 accounts today, or I never trade all of them at the same, because if I take a loss, like mentally, I don't like seeing a loss across all my accounts. You know what I'm saying? That just like, I'm like, ugh, you know what I'm saying? But so I play it like that, and I try to stagger them where I'm not at a place where I have to trade. You know what I'm saying? And what I mean by stagger them is like how I took a payout in one on Friday, and then I turned around and took a payout on another one on Tuesday. And then, you know what I'm saying? It ain't like, so I always have like one that's like right there or on deck, where I can take the payout if I want to, but I'm just gonna wait so that I don't have to trade. You know what I'm saying? I always gotta, I got that. I have them options. I kind of like play it like that. And then once I get to the point where I think they're gonna try to tell me they want me to go live, I'll just deliberately blow it. Right? I'll deliberately blow it so that, when they look at my account, they be like, oh, nah, he be blowing accounts. I don't want him to be no live trader. And the reason why I do that is because when they pull you up to live, for some reason, they make you pay like professional data fees. And it's like, I want to say, I don't know if all prop firms are the same, but I know the ones that I researched it on, it's like $200 and some a month to pay for the data. And right now I pay $12 a month for my own personal data. Like, why am I going to go be a professional trader for you and pay $200 and some a month when I trade my own capital and I only pay $12 a month for the data? Make it make sense. Just so I can say, hey, I'm a professional trader. Anyway, I just see myself on the screen. I just see myself on the screen when I was like, hey, man, that's all I got, man. If this was your first time tuning in to Tim's Tidbits, you probably not here no more. Right? If it's not your first time tuning in, I appreciate y'all for always tapping in, hanging out with me. I appreciate y'all for the hard-hitting questions. Right? The hard-hitting questions is what helps the community learn and solidify the concepts in our minds. All right. I did not do a pre-market analysis today. This morning, I had stuff going on this morning. The adventures of Super Dad don't stop. I will do a pre-market analysis tomorrow morning, and the jury is still out on price action recap for tomorrow evening. All right, I'll let y'all know tomorrow sometime if I'm gonna do price action recap tomorrow evening. But until the next time I decide to get on Al Gore's internet and share my thoughts on what's this in the chat. Oh, all right. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you know Hablo Espanol. Y'all be safe on these trade streets, man. Gone.